In this video, I'll explain trading with the market trend, showing you how to time entries by reading the market's direction instead of waiting for the perfect condition. You'll learn how to identify trend using simple price action. Alright, let's dive into this trading strategy with a real example. I'm going to use a gold chart on a 15-minute time frame to show you how it works. But here's the cool part. This approach isn't picky, whether it's stocks, forex or crypto or any time frame that fits your style. From super short 1-minute chart to longer daily ones. So feel free to pick whatever you're most comfortable trading and follow along. The first tool we're using is called the CMA Slingshot system. It's a straightforward indicator that helps you spot trade setup. If you're using TradingView, adding it to your chart is easy. Just head over to the top of the screen and click Indicators button. Then, in the search bar, type in CMA Slingshot system. Then, it will show up in the list. Click on it to add it to the chart. Now it's right there on your screen. So we've got the slingshot indicator on the chart. It's look good, but it can feel a little busy with all those extra features popping up. For beginners or anyone struggling to keep things clear, let's simplify it. Head over to the settings for the indicator, just a little gear icon next to the indicator name on TradingView. In the input section, you'll see a bunch of options. Keep show conservative entry and show trend arrow check cause they are handy, but go ahead and uncheck everything else. This cuts out the stuff we don't need right now. Next, switch to the Style tab. This is where we can clean up the visual even more. Uncheck these boxes: conservative buy, conservative sell, up entry, down entry, buy entry, and sell entry. That's it. No other tweaks needed. Now your chart is less cluttered and you can focus on what matters. Stick around cause I'm about to show you how we can use the setup to make money. But first, we need to bring in a second tool to tie it all together. Trust me, it's worth it, and I'll walk you through every step. Alright, let's make entering trades as easy as possible. Even if you're just starting out or finding things tricky, we're going to use price action for this strategy. It's all about watching how the market moves, but to keep it crystal clear, I'm throwing in an indicator that does some of the heavy lifting for you. Back in TradingView, click the indicators button at the top again. This time, type in swing high low support and resistance in the search bar. And when it pops up, click on it to add it to the chart. Alright, so what's the deal with these swing high and lows? They're like a map for finding support and resistance levels where the price tends to bounce or stall. Traders use them to figure out a smart stop for stop losses or profit targets. For example, if the price hits a new high but the indicator doesn't mark a new swing high, that mismatch, called a divergence, can hint that the trend might be about to flip. Those swing points are past tuning moments, so they're perfect for guessing where the market might hold up or break next. To make them even more useful, let's tweak a couple of settings. Click the gear icon next to the indicator name. And in the inputs tab, set swing high strength to 14 and swing low strength to 14. Then make sure swing high source is set to high and swing low source is set to low. Leave the style tab alone. No changes there. Now we've got support and resistance levels tuned with our strategy. Hang tight, cause I'll show you how this ties into catching those trends profitably. It's all coming together. Alright, let's talk about putting some cash in your pocket. Time to make some money. The first step is to nail down the trend with the CMA Slingshot system. It's super easy to spot. Check the indicator line on your chart. If it's green and price is hanging out above it, you've got an uptrend. If it's red and the price is below it, that's a downtrend. Why this is such a big deal? Cause trading with the trend, not fighting it, is a secret sauce to stacking wins more often. It's less about guessing and more about going with the market's flow, which makes your life easier and your profits bigger. Plus, it keeps you from those stressful trades where we're swimming upstream and losing money. So get this lock in your head. Trend direction is your best friend. Now, let's zoom in on those dots we set up with the swing high-low indicator. The green dots at the swing lows. Those are your support levels. Think of them as the floor where the price tends to bounce back up. The red dots at the swing highs, those are resistance levels. Ceiling where the price often stalls or drops. Here's where the action happens. We're trading breakouts. Say the trend is down, we're waiting for those support levels closely. What we want is a price candle, one of those bars on your chart, to close below the green dots. That's a bearish breakout. It's your green light to sell. For risk management, set your stop loss just above the most recent swing high, not miles away, but close enough to keep your risk in check, maybe a few cents or pips higher depending on your market. Then, for your target, go for a risk to reward ratio of 1 to 2. For buy trade, flip the script. If the trend is up, green line, price above it, focus on those resistance levels, the red dots. You're waiting for a candle to close above the red dot. That's your bullish breakout, telling you to buy. Place your stop loss just below the most recent swing low, and again, keeping it tight and sensible. Target that stays at the 1 to 2 risk to reward ratio. So your upside doubles your downside. This whole setup is about jumping into trades right as the trend powers through those key levels. It's accurate, it's logical, and the best of all, it's so simple that even if you're brand new or struggling to get consistent, you can start seeing trades work out.